Welcome to Fear and Greed, the week ahead. This is where we take a look at the big events, reports and releases coming up this week that give insight into the economy and a look back at what happened last week too. I'm Sean Aylmer, and every Monday I'm joined for the week ahead by economist Stephen Koukoulas. You'll find him at thekouk.com, thekouk.com, and on Twitter using the handle thekouk. Stephen, good morning.
Good morning, Sean.
I'm thinking of doing a new introduction next week. We've been doing this one for a long time.
Yeah, please feel free to change it as long as it's respectful and, of course, accurate. That's all I ask.
We'll see. Look, it wasn't a very busy week last week. The Reserve Bank minutes came out, but they didn't say too much. I think a lot of the big debate last week, really, in the lead up to the Glasgow United Nations Climate Change Summit, was all about what the government's position is going to be around climate change. And, I mean, that has emerged over the weekend. But for the economy, how does it affect the economy?
Yeah, well, you're quite right. The RBA added little to the debate, so we can move on from that. But as you correctly point out, these climate change issues are huge for economics, for financial markets, and they've been impacting for some time already, of course. But we're seeing it in terms of how banks are funding particular projects, that if you're in the polluting sort of sector, you're not likely to get as much capital from the banks and other fund managers as you might otherwise do. And it's the renewables that are doing very well. That's attracting the capital. Now, whether you're a believer or not, and I understand some people still don't believe the science on climate change, but it's going to happen. And you've just got to look around the world at the rapid pace towards renewables and how that is changing investment strategies, how it's changing companies. And quite curiously, I like to use this example from time to time that, BP, British Petroleum, which was obviously once just an oil company, that's all it did, in the last decade or so has transformed itself quite dramatically, where it's actually a renewables powerhouse, that it's instead saying, well, just sitting there and pumping oil out of the ground. That's still part of their business, of course it is, but they're saying that for them to remain relevant over the next decade or two, they need to move with the times.
I was listening to a conference last week, and Shane Elliott, the boss of ANZ, was speaking, and he said, not in so many words, but do you bank a company that has a strategy for climate change that's in a dirty industry that is transforming, or do you bank a company that isn't in a dirty industry but has no strategy for climate change? And it's a really interesting moral dilemma for the banks, because, he didn't say this, but what he was getting at is we're actually probably better to bank the oil and gas company that's trying to become a renewable than we are the kind of middle company that hasn't even thought about climate change.
A really interesting concept too, because again, and this is the discussion I've had with a lot of fund managers over the last couple of years, the debate about whether they should be still holding their shares in, I'll just use the example of coal companies, that a number of the large super funds have sold out of them or downsized their holdings. Others have said, well, quite vehemently, we want to hold our position in these coal companies for a couple of reasons. One is that coal is still going to be around at least a little bit for the next few years, but also they can influence the board's strategy and how a coal company can perhaps transition towards some renewables. And if you're on the sidelines, you're not a shareholder, you're not a member of the board, and you're not voting on what they do, you're out of the game, and you're actually not having that impact that you might otherwise have.
No, I don't want to be a cynic. Maybe that really high price of coal helps them with that argument too.
Well, it's been very high. Though. Just late last week it started to come off the boil, but yes, it's been a phenomenal rise.
Well, that's last week. We'll be back in a moment and get into the week ahead. I'm with economist Stephen Koukoulas, a.k.a. The Kouk. Huge week, Stephen. Inflation.
Massive. And this is Australia's quarterly inflation reading for the September quarter. Unfortunately, we don't have an official monthly inflation number. So where the rest of the world is having the monthly updates on inflation pressures, and you look at the US, the UK, Eurozone, even Japan, heaven forbid, there's inflation pressures building. And that's caused the bond market to sell off. It's caused monetary policy expectations around the world to change. So we get our quarterly inflation number, expected for the headline figure to be around about 0.7 for the quarter, 3% year on year. So the upper end of the target range. There's still a few distortions from COVID-related issues, but even underlying inflation, the trimmed mean measure that the RBA love to use, probably a 0.6 for the quarter, which gets us just to about 2% annual. So just perhaps for the first time in quite a while, moving to the bottom of the target range. Huge implications. Any upside surprise like we saw in New Zealand a couple of weeks ago will really reinforce the expectations in markets here that perhaps that rate hike won't be in 2024, could even be in the latter part of 2022.
And it's not a bad thing to have a bit of inflation in the economy, Stephen?
Yeah, well, it's actually a good thing. Again, like good red wine, a little bit's good, too much can be a bit of a problem for you, but none is no fun at all. So, you've got to have the price signals coming through different sectors of the economy to allow the economy to grow. And that's why every central bank I'm aware of has a positive target for inflation. It's not minus 2%, it's about 2%. In Australia's case, it's between 2 and 3%. So it's a sign that your economy is growing at a reasonable pace, that you're getting a little bit of wage pressure coming through when you've got inflation, in that 2 to 3 band. And, for many years now, pre-COVID, we didn't quite have that momentum. And, it felt like the economy wasn't really performing as it should.
Retail sales are also out this week?
Yes, retail sales, this is an important one because for the month of September, probably very weak because we know September, over half the country was still locked down, and it's only now that we're opening up, thank goodness. But probably another weak result, probably a minus 1% to build on the 3 big minuses in the previous 3 months. So that's a downside. But the September quarter number is the first building block into the September quarter GDP results. Retail spending makes up around about 20% of GDP. So we'll have the Bureau of Statistics, having obviously the dollar values that have been sold in the retail sector, but they'll also have the volume measure, which feeds into real GDP. And again, we're looking at a figure of about minus 5% for the quarter. So a big drop as many of us were locked down and sitting at home and not spending much money.
And private sector credit's out too.
Credit's out, yes. Another strong result expected. These house prices that we're seeing are fueled by borrowing. So expect housing credit to be increasing very close to a 10% year-on-year pace. So a lot of mortgage holders are ramping up their borrowings. Business credit probably a little bit softer. Again, this is during the lockdown period, so a lot of CapEx was postponed. But nonetheless, we'll be seeing mortgage credit accelerating yet again. And again, that's something that is causing a few little concerns for APRA, the RBA, and other people looking at house prices.
Enjoy the week, Stephen.
Thank you, Sean.
That was economist Stephen Koukoulas, better known as The Kouk. You can find him at thekouk.com and follow him on Twitter using the handle The Kouk. I'm Sean Aylmer, and this is Fear and Greed, the week ahead.